Good afternoon, everyone. Everybody's starting to log in now, so we'll give it a couple more minutes. I want to give everybody a chance to get in and get set. So, hope everybody's having a great afternoon. Start in another minute or two. I'll give it another 60 seconds. People are still trickling in, so yeah. Hope everybody's warm today. A little warmer here in the Northeast, which is nice. Thank the Lord. All right. Well, great. First, I'd like to thank everyone for attending and giving us, giving us your time today. My name is Ben Scribner. I'm a regional sales manager here for Angel Oak Mortgage Solutions in the Northeast. The outline of this is DSCR loans, what they are, what they're not, how they can serve, your local markets, and how you can use these products to expand your referral networks and really the understanding of the program itself. So also a big part of this, guys, is interactive. So if you have questions, anything like that, throw them in the chat box. These presentations always go a lot better with audience participation. So please don't hesitate to throw in questions. There's no such thing as a stupid question. So please, any questions you have, throw it in the chat box. But with me today are actually two of my account executives. I'll start from north to south. Drew Ruggieri in Central Jersey. Drew, I'll let you introduce yourself.
Hey, everybody. Thank you so much for attending. Looking forward to presenting the information to you. My name is Drew Ruggieri. I am in Central New Jersey. I've been with Angel Oak over 4 years. I've been in the mortgage business over 25 years. So happy to present this program to you.
Awesome. And then Gary Martinek, and he's, I'll let you introduce yourself here.
Hey, everybody. My name is Gary Martinek. I'm an account executive in the state of Maryland. I handle Maryland, Delaware, some parts of Northern Virginia. I've been with Angel Oak pushing about 8.5 years at this point, and I've been in the business mostly in the wholesale side of things for, kind of embarrassed to say, but almost 31 years now. So I've been around for quite some time. So look forward to presenting all this this good material to you.
Awesome. Thanks, Gary. Obviously, the three of us, I'm actually just north of Philadelphia. I'm a Beltway kid, so DC's near and dear to my heart. But, we're doing this on behalf of the entire company nationwide. So we appreciate everyone in attendance from coast to coast. So you're going to get a little bit of Northeast flair today, which will be good for everyone. Before we start, and we want to do a quick poll, because this is always important. Who's done raise your hand if you've done a loan in a DSCR loan in the last 12 months. We're going to launch a poll here in a couple seconds, and we'll leave it up for a couple seconds. It's important to note, this program has evolved over time. So, if you haven't done in the last 12 months, it's going to be a similar feel to it, but there's a lot of different nuances and expansions that have actually taken place. So we definitely want to see, what everybody thinks as far as recent activity. But we'll give it another second because that's always a good one. Poll results. I can't see it. Okay. All right. Perfect. So 25% of you said yes, that you had done a DSCR loan. 75% of you said that you did not, which is great. So that's actually great to know. DSCRs are absolutely a huge part, should be a huge part of your 2024. They are a huge part of non-QM in general. So that's great. We'll have a lot of folks learning about this program, for the first time. We always kind of launch everything off of our main website, angeloakms.com. Everything we have is here. So if you ever need anything, obviously this is a great place to start. But all of our mortgage programs are here. But since we're covering DSCR today, we'll go ahead and jump into just the general overview of it. And let me scroll in here. You guys can see that, right, Gary? Drew?
Yeah, I can see it.
Yeah, Gary will cover the general program overviews here, and we'll get a good discussion.
Yeah, so the DSCR program, for people who may not be terribly familiar with it, you should become very familiar with it. I saw that in the poll that 75% of the people who polled had not closed a loan in the last 12 months, DSCR loan, which probably means they may have never closed a DSCR loan. So this is something you should very much familiarize yourself with. It's going to become a huge part of what you do. For instance, maybe a few years ago, the DSCR program represented about maybe 10 to 15% of what we as a company did, and I did as an account executive. But right now, I would say in the last year and a half or so, it's moved up to about maybe 25 to 30% of the loans that I'm and the company's actually doing. So it's becoming more and more relevant to not only to you, but to your referral partners. And what it is, and forgive me if I jump around a little bit and don't speak directly to the slide at all times, but what it is in a nutshell is a loan specifically for investment properties. It is a no employment and no income loan for investment properties. So very unique type program where you don't have to pull any tax returns, pull any 4506s, don't have to get involved in anything like that. It's strictly based on the cash flow from the subject property. So a couple of highlights here. And as I jump around a little bit, I'll mention some of the enhancements and maybe some examples that we've done and that I've done recently and in the past. So minimum loan amount's $100,000. Maximum loan amount, this is a recent change. Until recently, it was about $1.5 million. Now it's $3 million. I personally don't see a ton of $3 million investment properties, but I'd love to see more. But I'm sure there are many places around the country that's where it's a lot more commonplace than in other parts. So up to $3 million with a no income, no employment loan for an investment property. The qualifications, there is no debt ratio, so there's no income. I don't really care. We don't really care how much monthly debt you're carrying. All we're looking at from a ratio standpoint is, does the subject property cash flow? By that, do I mean, what is my rent compared to my principal, interest, taxes, insurance, and any association fees that are associated, if applicable, to that property? Does it cash flow? Does it equal? Does it exceed what my housing expenses for that property? If the answer is yes, that it does equal or exceed, there's a deal there. Minimum FICO score for this program is 680. Properties, and this is another example of something that we do all the time. And a question that we get, and I'm sure Drew gets, and everybody gets all the time, which is, can I title the property in an LLC? The answer is yes. Probably half the DSCR loans that I close are titled in an LLC. Very simple requirements for that. Simply, the LLC has to be in place for the purchase and management of rental properties, and the borrowers do have to apply as individuals and have to sign the note, the deed of trust. But yes, we do this every day of the week. We close and title loans in the name of an LLC. Another great question. There are restrictions, of course, in the agency side with how many properties, finance properties that you can own. On all of our programs, the answer to that question is 20, except for this one. So you can own an unlimited number of finance properties. Now, You can have 100 properties, and I actually had one like that once. It can become a pain if you have to fill out the 1003 and list all the properties on the schedule of real estate, but we don't have any limit on the number of finance properties that you can own. One of the requirements that we have is to qualify for this program, you can't be a first-time home buyer. You can't be living in your parents' basement, and you can't be a renter. You have to own a primary residence strictly for the fact that this is going to be an investment property, and we have to be comfortable with the occupancy. So you do have to be an owner of a primary residence. So we do allow purchase, we do cash out, we do rate and term, we do more purchase and cash out than we do rate and term, but we do allow all transaction types. We do allow 30-year interest only. With a 680, you can go to 75% LTV. With a 720, you can go to 80% LTV for an interest only. And a recent enhancement here, which you should all know, which I thought we would never do, is we used to qualify based on the fully amortized payment, fully amortized rate. We now qualify based on the interest only payment, which is a big deal. Before that, I didn't get personally too many interest only requests, but now that we're qualifying off the interest only payment, we do get more requests for that. That is a big deal. Loan amounts, like I said, up to $3 million, depending on the FICO score and LTV. If the loan amount is above $1.5 million, we are going to require a second full appraisal of that. Condos. We do single family, 1 to 4 unit properties, townhouses, condos, wardable condos, and then with non-wardable condos, we'll look at non-wardable condos. Primarily what we're talking about is investor concentration when it comes to non-wardable, which we mean we will allow up to 100% investor concentration without a problem. If we have if the delinquency rate is too high, that's not an exception we're going to be able to make. But if you do have a non-wardable condo that you want us to review, we're happy to do that. Another recent change, by recent I mean within the last 6 to 12 months, recently we only allowed permanent resident aliens with a 10-year green card or citizens to qualify for this loan. We do now allow non-permanent resident aliens to apply for this loan and to qualify for this loan, which is a recent change. It's a big deal. We do another big change, which he said we'd never do, but we are now, which is becoming more prevalent, especially in resort areas around the country, which is condo tails and short-term rentals. We do those now, and that's a recent occurrence. So if it's a condo tail in a beach area, yeah, we'll definitely take a look at that and do that. And we'll get the rent calculated based on, the appraiser will base the rent on a short-term rental comparison in that given area. Or if it's a refinance, we'll get a 12-month printout from Airbnb, VRBO, to qualify them based on the going short-term rents for that area. DSCR, what we mean by DSCR 1.0 and no DSCR. A DSCR 1.0, 1-to-1, essentially all that means is, does my projected rent that comes back from the appraiser, let's say, does my projected rent equal or is it greater than the projected principal, interest, taxes, insurance, any association fees with that? So a 1-to-1 DSCR is the rent comes back at $1,000. The PITI association fees are $1,000. That's a 1-to-1. For certain FICO bands and LTVs, we will go below a 1-to-1 ratio, meaning that if your rent comes in at $800 and your PITI is $1,000, there's still a potential loan there depending on whether or not you have a 700 or 720 FICO score. We can go below that, where we typically say it's not necessarily cash flowing at that point, but there is a solution for that particular borrower. So we will go below, which is something not all of our competition does, but we will. Ben, can you scroll down just a little bit? It's cut off at the bottom. Right there, the next one. Okay. One of the things we are allowing now in certain states, and you'll see the states listed there, business purpose, which we consider DSCR loans to be business purpose type loans. We will allow loan officers who are not necessarily licensed in these states, but their companies are, to generate loans in those given states where they may not be licensed, but their companies are. This particular loan in general, which we consider a business purpose loan. So drifting back into positioning this type of program. We're going to talk about this more in detail later, but this type of loan is perfect for someone who's building a portfolio, or is perfect for not only you, but your referral partners. If you're working with real estate agents, they want to know about this program. So if only 25% of the people polled out there have generated a DSCR loan in the last 12 months, chances are that your referral partners don't even know about this in many cases. This is something that you're going to want to bring to their attention, because a lot of your referral partners are building a portfolio of real estate rental properties. This is a great way for them to continue to build their portfolio without having to go through the hassle of showing their tax returns, their Schedule E's, and possibly having a situation where they may not income qualify. Doesn't come into the equation when we're doing this loan. So not too many moving parts on this loan, since there's no income and employment that we have to receive on this. So that's it, Drew. Ben, did I cover everything or did I not?
No, I think so. And funny enough, Drew, we have some questions filtering in the chat, and Rob Yankowski said Central Jersey does exist. So that's awesome. A couple great questions. Esteban actually asked a couple. Drew, rural properties on this program.
Yes.
I don't know if you.
Right,
and the next question, the follow-up question was max acres. That's always a big question, especially here in the Northeast when you're getting resort, mountainous type areas.
Yeah, so maximum acres, max is 10. I have seen some exceptions over 10, but specifically typical can't be a working farm. We're not going to take a look at and do anything over 20 specifically. Just like anything, any other, kind of unique property, I don't like to use the word unique, but it has to comp out, so make sure if you're doing something that's kind of, a little bit different, make sure you can get the appraiser to get yourself some good, mirroring comps, which always helps, get us financing.
Yeah, and I'll add a little thing on that. When you're dealing with rural, we don't do anything off grid. So, your berms and some of your weird stuff like that's something we don't really go. It's got to have electricity. It's got to have, wells fine. That's not, that's not a problem. But it can't be. It's got to be on the grid. Trust me, we see all types of properties. So, but trust me, we've seen some that are just like, okay.
If I could just jump in real quick there to what Drew was just saying, because I like to talk, and one of the great things about working here is we're always looking at making enhancements, right? And so Drew brought up 10 acres, and we allow rural. That's not always been the case. It used to be that we were capped at 2 acres, and we couldn't allow rural properties. But now, recently, it makes sense. We're able to do that now, and that's a big enhancement that we've just rolled out recently.
Absolutely. A couple other questions, and I'll answer this one. Tammy, can you use these for commercial properties? So we only do residential. Now, if you have a commercially zoned property that's in a residential area, it's a traditional residential house, that is something we can certainly look at for sure. But unfortunately, we don't do anything true commercial. That's what we stopped at 4 unit. So we are hoping to get a 5 to 8 out here soon. But as of right now, unfortunately, if it is a commercial property itself, that's not something we can do. But if it's commercial zoned residential property, that's something we can always look at. So S1 actually great. S1 actually had a great question too, and Gary's talked too much, so we'll let Drew jump on this one too. Investment property not currently rented, can we still do it? It's a cash out at 50 LTV.
So, like Ben said, and Gary said, so we're always looking at specific scenarios. So the short answer to that would be no. If it's vacant, no, we're not going to take a look at that as a refinance. Another enhancement, as Gary said, we're always looking at enhancements, and another enhancement would be something that's a short-term rental. If you have a property that's in a vacation area, it is a short-term rental, and you just happen to catch at that time of year where maybe it's vacant for a week or 2 weeks, that's something we will absolutely do. Have a lot of questions, have a lot of scenarios people call me about regards to my investor just bought a property, it's vacant, looking to bought it cash, looking to get some cash out. We're going to go into deferred financing later, but it has to be tenant occupied unless it's a short-term rental type property.
And Petra actually came up with, speaking of, can you short-term rental income be used? I actually have a little bit of an appraisal background. And Petra, I mean, the easy question to that is we are going to go off an appraiser's market rent analysis unless you have 12 months worth of short-term rental history. So if we have that 12-month rental history, then we can absolutely use that. We're still going to get a 1007. We're still going to require that. Appraising right now, they're starting to shift a little bit from using annualized leases, which technically they're supposed to do on a 1007, and they're starting to shift into that short term, especially in high seasonal kind of areas. That's sort of, there's some back information on appraising and market rent analysis for short term rentals and things like that. But so the short answer is yes. But we are still going to look at that 1007 as well, but we can override that 1007 with that history. Our chat, our question answer extraordinary is still, he's a little bit delayed. I'm not sure if he is on yet. So we do want to answer definitely everyone's questions. And Natalie and Gary, I'll let you answer this one. Is the title under LLC? Does the new mortgage, will it show on the individual's credit report? That's always an important question. Yeah. We get that a lot.
We get that a lot. And the answer to that question is yes, because they do have to sign the note, the deed of trust. They have to apply as an individual, but the vesting itself can be in the name of the LLC, which most people want to put it in the name of an LLC strictly for liability reasons. But it will show up on the individual's credit report. So it's not like a commercial loan. It still is a residential loan, and it will show up on their credit report.
We'll jump one more. Stephen asked, and Drew, I'll throw this to you. Can you do two borrowers if one isn't a homeowner and one is? That's going to have a couple different facets to it.
There is. That's right. That's a little bit of a specific scenario question. Short answer is, maybe. It's a definite maybe. It has to. We have to take a look at the whole entire picture. So does that one person who doesn't own the home, where do they live? What do they do? Where's the subject property in relation to where that person is living? Main thing you want to think about in any scenario, kind of Gary touched on, is we want to have little to no question about the occupancy of the subject property. So reason that we require the borrowers to own a primary residence, because we want to make sure the property they're buying is strictly an investment property. So we want to have any question, any gray area, but we will look at any scenario. Gary touched on a little bit as far as exceptions. Depending on the scenario, we make a considerable amount of exceptions. So short answer, no, but let's take a look at it if you have a specific scenario.
Great. And Mary actually asked a great question, and this can go out to everyone. Is this being recorded? Yes. This absolutely is being recorded. It will be, a link will be sent out to everyone who registered. You didn't even have to technically attend. We will send it out to you, but it is also always available on our blog. We record all of our, we host all of our product webinars under our blog section right off our website. So it's actually a great question for everyone, just in case people get caught up or have to take a phone call. Max LTV is 85. I forgot. I'm in the 85 LTV. It goes up to 4 unit also. There's not an LTV reduction on the 85. So that's that's a great one. Tracy Snyder asked, since I'm in Florida, does this mean I can go in any state for this or only the states listed? So Tracy, yeah, unfortunately, with the business purpose, these are the only states that you'd be able to operate with this program. we do require someone to be NMLS licensed with us. Even if you have to be NMLS licensed at least in one state, your home state, whatever. But you can operate in these states on this program without being licensed in those states. So we don't actually work with commercial type folk or anything like that. We're a residential lender, so we do require an NMLS license in general, but not in those states specific. I know Mo's going to jump in here and answer some of these questions, guys, but don't worry, we will get to everyone's questions. Want to give Drew a shot because we really want to take you through, what's required. A big question is, okay, we've said no income, no employment, but what do you need? The question of what do I need on the 1003? What are you looking for a credit decision? Things along that line. So Drew, I'll let you take that, as far as pre-qual and loan and all of that. I'll let you go.
Yeah, absolutely. So as everybody knows, for all in this business, the 1003 tells the story, right? So whether you're doing a conventional loan, FHA, whatever type of story, you have to fill out that application and complete and accurate as possible. Same thing goes for us. So we're seeing the 1003, we're seeing the credit, we're making a determination of does this scenario fit our guidelines? And kind of as I touched on, if it doesn't fit our guidelines, could we make an exception based on the information that's on the 1003? So can't stress enough, please be as complete and accurate as possible. With that being said, you're going to complete the application same as you would any other application. The only caveat is you want to completely delete any employment information at all. We don't want to see anything. We don't want to see any income. So that's completely blank. Make sure all your REO is complete. As I touched on before, we want to make sure that there's a primary residence owned. So that, of course, wants to be listed in the REO section. And then last is your assets. If it's a purchase, we want to make sure that the borrower has the 15, the 20%, the 25%, or do they have at least 10% and are they getting a gift? So all that information absolutely be listed on the 1003. And, obviously the current primary residence, make sure you're clicking, if they own it outright, they still do own it. Make sure you don't put no housing payment because technically they do have a housing payment. They have taxes and the insurance. So that's kind of a little bit of a trip up for some people, but just be as complete and accurate as possible. And we'll work through the scenario.
Yeah, and Drew, a lot of people ask like, well, if this is a no, I want to say no doc because that's not really what we want to call it. It's more light doc or something along, as far as catchphrases go. But a lot of people ask, well, if this ratio doesn't mean anything, why do I need to list all this REO? And I know we get that question a lot when someone has a portfolio. They're like, oh, good gracious, now I got to go. We got to go get addresses and all of this information on 25 properties and why. Do you want to elaborate a little bit on that? Because I always think that's a fine point that folks really need to understand. Absolutely,
it's a valid point. So anything that's listed in your borrower's personal name, whether they have a mortgage or not. Let me take that back to where that. So if they're listed in a personal name and they don't have a mortgage, you technically don't have to list it on the REO. If it does have a mortgage and it's listed, of course, on the credit report, we're able to see that mortgage and their payment history. If it has a private mortgage, the reason that Ben said we want it listed on the REO is we want to make sure all properties that they own in their personal name have a good mortgage payment history. History typically leads to what happens in the future. So if they're currently behind or have been behind on other properties, then that could possibly tend to lead us to, are they, going to make our payment moving forward? So again, anything listed in their personal name that has a mortgage should definitely be listed in the REO section.
Yeah, and for those folks that do have that laundry list of REO, you can do a side workup sheet for it.
Sure.
If that's easier, we understand that if someone has, 50 investment properties, yeah, that might be a bit of a challenge to list out on a 1003. 1003 is already long enough. You don't want to add 52 pages to it. So we can always take a side breakout as long as it's, it's legit. It's got all the information we need. That's perfectly fine. I always like to add that on there because, we do a lot of work with investors like that. They're like, well, I got 50 properties in a blanket. I got 25 properties I own with my brother, and me and my wife own 10, just us. Like, okay, all right, let's get this, let's get this picture together. One question that came in, and well, actually, I'll wait on that one. Well, yeah. So I mean, actually, that's a good segue. Sorry, I lost my place. Okay, and he's actually asked, and Gary, do you need a tri-merge credit report, or can it be one score? And we'll jump right into the credit question. Right, we talked about the 1003, the program overview. As far as credit goes, what are we looking for? And obviously, Anise actually had a great question.
Yeah, that does go right into our next section, which is what we're looking for from a credit standpoint, which is we need at least 2 credit scores, right? So we need a minimum 680 FICO score. If you have more than one borrower, because it is a no employment, no income loan, we're going to go off the lower middle FICO score in order to qualify. But to answer your question, we need more than one. We need at least 2 for every borrower that's going to be on the transaction. So we do need 2 scores at least. And going further into what our credit requirements are, from a trade line requirement, we need at least 3 trade lines that have been open for 12 months, or we need at least 3 trade lines that have been open for 24 months. We used to have a requirement there was activity within the last 12 months, but we eliminated that, so they just have to have 2 trade lines that have been open for at least 24 months. From a derogatory credit standpoint, what's allowable, and I'm going to kind of segue into another topic in just a second when we talk about this, which is, consumer credit. We allow, the guidelines stipulate we allow a couple of delinquencies, a couple of 30-day delinquencies. From a mortgage standpoint, housing payment history standpoint, we allow for 1 times 30 over the last 12 months, or if the last 12 months are clean, months 13 through 24 can have a 2 times 30 on mortgage payments. Seasoning requirements for any type of events. Like when I say events, I mean a housing event considered a foreclosure, a deed in lieu, a short sale. There's a 4-year seasoning requirement, or even a loan modification. For a bankruptcy discharge, we're looking for 48 months as well. Now, that being said, one of the things that Drew was just alluding to from what we look at up front and what we try to do is we try to eliminate, a lot of the guesswork on these loans. There are a lot of loans that are going to come in that don't fit as a cookie cutter, right? And Drew mentioned that we do make exceptions on loans, right? So if you got something that doesn't fit exactly, and I'll give you an example of something that I've done, like it doesn't fit exactly, since about 20 to 25% of the loans that we actually close have some form of an exception made to them and they perform very well. Like as an example, let's say you've got 1 trade line for 26 months and 1 trade line for 20 months. It doesn't fit exactly. We want to see that loan, right? We want to see it. We have a process up front where we're going to send it to our risk department to evaluate, can we make an exception on this loan? Are there compensating factors? Can we do that? They come back with the answer, yes, that follows that loan all the way through process, right? An underwriter can't come behind that and say, I don't like that. I'm not comfortable with that. Risk department has already decided that that's acceptable for this particular loan, so that will follow it through the process. So if it doesn't fit exactly, the 3 trade lines for 12, the 2 for 24, but we're close. We want to see that loan. If it makes sense and it's a good loan and you believe in that loan, we want to talk about it. There are exceptions we'll never make, but there are a lot of exceptions we do make if we're comfortable with the loan. So we do want to see that. So that's it in a nutshell.
Absolutely. Yeah, and I think to add on to Gary, what Gary mentioned, like, non-QM is that gap between your hard money and your traditional conventional loan, but a lot of our loans don't fit into that traditional box. So even into our square. So it's being able to make that end credit decision, which Angel Oak's one of the largest non-QM originators in the country, of course. We're one of the one of the originals into the space. Being able to have that end decision is huge for us. So we vet all of that up front. That's actually a big part of our partnership conversation with our clients. Is we'd rather get you a definitive yes or a quick no. We're not ever going to sit here and say we can close every loan you got. Of course not. Anyone who says that, you can't believe. But we want to get a look at it, and we want to be able to take to see what we can do, see how we can restructure, see if there's exceptions to be made. So letting us get a look at it is always the best idea. Martin actually asked a great question. DSCR is 1-to-1. We actually have we have a no DSCR option, Martin. So if you're below a 1-to-1, you can still do those loans. We have two different kind of scales down, as Gary mentioned. So some of them, the LTVs do start to slide, 5 here, 5 like that, and there's a little bit of a price adjustment. But we can absolutely do loans that are not cash flowing. So that's always important. Holly Fox asked a good question, and Drew, I'll throw this one to you too. With the no income docs required, what documents are required? It's kind of a perfect question. When you're talking about, the no doc-ish, loan, well, what do you need? That's a perfect question.
Yep. So it's pretty short for a refinance. If you're actually doing a cash out refinance, we require 6 months reserves, by the way, on all of our programs, except for the foreign national. But for your 6 months reserves, if you're doing a cash out refinance, that cash out fund can be used to cover that cash out, requirement. So you may not even need assets on that particular scenario. But for purchases, you'll need to source and season 30 days worth of your funds, down payment, closing costs, and you're going to have your typical ancillary documentation, your title, your homeowners. As I kind of referenced a little bit ago, if you have a property that with a mortgage that isn't reported on the credit report, we're going to want to see a good payment history on that property. So it's still minimal, but there is still, of course, a little bit documentation. It's not quite no doc yet.
Absolutely, and we'll definitely get into some speed. Actually, that's a good segue. A lot of the common questions we get is, how fast can you close these loans? We understand the type of borrower that this loan fits. They need to go quickly. They need access to their cash quickly. They need, there's no frill in timing, when you get into the investor circle. So Gary, if you want to just quickly cover, how fast, a big question is, how fast can we get this loan clear and closed? It's always everybody's question.
Yeah, right. So, like I was talking about when I was going through the actual program, there aren't that many moving parts. And then Drew was just alluding to what kind of documentation was needed. So we don't need employment. We don't need income. So we're not going to pull any tax transcripts. So in our turn times are, 2 to 3 days for an initial underwrite, about 2 days for conditions, about 2 days to move a deal from clear to close to the closing department to close a loan. So, these loans, depending on how quickly conditions are uploaded, should close in less than 3 weeks, 21 calendar days. That's my experience with the loans that I've been closing. By and large, they're closing in 3 weeks or less. The only thing that takes any length of time, and it's gotten a lot better, is the appraisal, right? So, but it shouldn't take you more than 3 weeks or so to close this type of a loan.
Yeah, and we do accept transferred appraisals. So that is something we do want it to be completed by an AMC. Now, if you guys ordered it yourself and you're a larger IMB, things like that's something. If you have an appraisal department with air and if some of those departments place, we can look at those if it's not done by an AMC. But we absolutely. So a lot of times, we'll see a lot of fallout and stuff. All of a sudden, somebody be buying an investment property conventionally, and then borrower says, well, I want to invest title in an LLC. And you're like, oh boy. All right. So now you got to go to a non-QM option. Or they do something ridiculous and, go buy a Porsche. or furniture, whatever. We've all ran into it. So, and then now a lot of people use non-QM as a fallout program. Now we'll talk about here in a couple of minutes, where we really want you to go find these borrowers. That's a big part of what 2024 should be about. Everybody wants to put 2023 in the background. So, using these programs as fallout is great. Of course, that's a good thing. But going out and finding these borrowers and running in these circles and educating your realtor partners, that's actually a huge part of what we want to do with you. Antonio asked another funny question. When are you going to do business purpose loans in Texas? Unfortunately, Antonio, that's not something we can do. You actually have to have as I understand, you have to have, I'm not from Texas, I don't do Texas loans personally, so I believe you have to have a bond in order to do loans, any loans in Texas, I believe. Don't quote me too hard on that, but I was told that Texas is a little bit of a challenge when you're talking about not being licensed in that state. And Kelly asked, what do you consider rural? And I'll just answer that real quick, guys, because we want to keep going through these questions. Whatever the appraiser says, unfortunately. That's what if the appraiser says rural, that's what we're going with. If you feel the property is not rural, there's a lot of areas that you call urban, that rural-urban sort of mix. The Poconos are kind of going that way if you're in Pennsylvania. There are a lot of areas that are kind of going, Tennessee has a lot of those type of areas that were very rural over the last 30 years. But now, like Dolly World, like that used to be rural, but now it's really not anymore. So, it's really whatever the appraiser says, unfortunately. Jerry. All right, Jerry, this one's for you. And it's Taylor ham, not pork roll. We're getting some funny ones on that. No. I love that.
Yeah.
I'll answer one more, Rob. Max LTV on a cash out for property owned free and clear. We don't have any LTV reduction for free and clear property. So that's not, that's not something. If it's free and clear, great. That's not something we would have any issue with or overlay on. But I do want to talk about delayed financing. That's always a huge part, and I don't want to run us too low on time because we do want to, we do have other things to cover, including how to run scenarios. But Drew, if you want to talk about delayed financing and the impact that can have. And why loan officers really want to add that into their conversation when working with borrowers or realtors or everyone.
Absolutely. So as we've all experienced over the past year and a half, market moves extremely quick. So lots of scenarios, lots of calls recently that from you guys that my client purchased the property cash. And now wants to free up that cash to move it on down the road to purchase another property. Or a little caveat that not a lot of people do out there or people know about is I got my borrower purchase the property hard money. Either of those two scenarios we consider and we'll be able to take a look at through the delayed financing. So really delayed financing, similar path to kind of the conventional type of financing. Anything purchased under 6 months, we're going to be able to use the purchase price as the value to determine the loan to value. And we're going to treat that scenario as a purchase transaction under the purchase transaction guidelines. So we could certainly use the DSCR program to help your borrower free up that cash that they just recently purchased that investment property. Again, up to 80 LTV. Get them the cash back that they purchased that property with. Move on down the road to purchase another property. Absolutely.
Yeah, and I would like to say, I mean, we all know, a lot of loan officers on here. You probably ran into the scenario yourself. You have a loan, it's going great. All of a sudden, something happens. Borrower says, you know what? I'm not going to lose my EMD. I'm not going to, I'm not going to lose this bit. I'm just going to go buy it in cash. Now, for you as a loan officer, ouch, right? You didn't want to lose that borrower. This is that great conversation because most of the time they don't want to really buy that house in cash. That's not optimal for them. No one wants to tie up that much money income producing property, especially if it's going to cash flow or even if it's losing a little bit, nobody wants to tie that much cash into it. So, it's always that conversation for you. It's okay. All right. I understand you need to do what you need to do, buyer, but hey, we'll be able to take you out of this so you don't lose that client. It's always a great, you always hear that, wow, they lost offer to cash. Well, if your borrower has cash and they want to go down that road, well, you have an option for them to be able to get that cash back out without that LTV reduction for cash on them, without that rate hit. So it's essentially like we're doing the original one. But another big, outside of delayed financing, which is very popular, is when you're talking about, investors and fixer-uppers and things like that. Gary, as far as cash out, because that's, we have that delayed financing conversation, but the second one is, how quickly can I do a cash out with new appraised value?
Yeah, that's a great question. So, Drew just touched on delayed financing, which we can do up to 6 months from acquisition, but after 6 months, we have to treat it as a cash out transaction. We have to have the house appraised at that point, which we need an appraisal anyway, but we can go off appraised value after 6 months of ownership of an investment property. So it's a 6-month window. Prior to 6 months, delayed financing. After 6 months, it's a cash out transaction with a new appraised value.
Yeah, and we always see a lot of people that will buy it, especially if everybody watched HGTV for the last 20 years, and now they want to go buy an investment property and they want to fix it up. And, a lot of times they want to recoup the money that they put in the property. They don't, again, they don't really want to sink all of that money into a new kitchen on this investment property they just bought. So, we get that question a lot. It's, hey, I bought this investment property. We put, $100,000 into it to redo the thing. And, now we want to get that cash back. We're going to rent it out, things like that. So that 6-month rule for us for new appraised value is something, and we can always have a little lead time on that too, guys. So if you're at 5.5 months, things like that, don't hesitate. We can close that thing, on new appraised value 1 day after that 6-month rule. So you can always, and we might be able to get an exception to close a little earlier if you have to, but so there's that two sides of that coin. That 6 months is before delayed financing off the original purchase price. After 6 months, you can go off new appraised value. So it's always important to know where you are on timeline and how long you've been on title. And Gary, I'll come back to you on this too. Good question. The program, is it allowed for first-time investors?
Yeah, so we don't require any type of landlord experience as far as purchasing a home using the DSCR program, as long as they own a primary residence. So no, we do a lot of first-time investors with this program. So no requirement for any type of experience as a landlord.
And hold on, sorry, I'm reading. Gift funds, Drew. A lot of people do talk about gift funds and are they eligible on this sort of out-of-box program?
Yes, absolutely. That's a recent enhancement over the last probably 12 months for us. Previously there was no allowable, you couldn't get a gift fund for an investment property. So we do allow gift funds. The borrower has to contribute 10% plus the 6 months reserves. So we need to see that the borrower has at least 10% of the sales price plus the 6 months pity payment. Everything else through the transaction can be in the form of a gift from a family member. The only little caveat to that is if you're over 80 LTV, so our new enhancement up to 85 LTV, no gift funds are allowed. I think Gary mentioned it as well. We allow up to 3% seller concession. So if you're at 80 LTV, 10% down, plus a gift, plus a seller concession, they can get into an investment property.
And Bradford, I'll answer this question for you. Bradford asked, I have a borrower that rents out rooms, has a 2-year history of doing this, and it's above market rent. Can I use actual rents or do we have to use market rents? And Bradford, and to that question, if you have, so we'll have a 1007, we'll look at the market rent analysis. But if you're getting more money than that, we can absolutely overrule the appraiser's opinion. So Absolutely. If you have documentable history on, well, say the appraiser lowballs you, of course, we all see that, every so often. And you're like, well, wait a minute, appraiser, you said, $2,000 a month, but I'm running this place out for $3,000 a month. All we just need is to document that history, and we can absolutely use that $3,000 to qualify you on the DSCR itself. So that's actually a great question, because there's a lot of that of actual rent versus market rent, and what happens if one's higher or lower. So that's actually a great question. Robert Page asked, zone commercial. Again, if it's zone commercial but it's a residential property, it's like a traditional residential property, most of the time that's going to be okay. If it's just a zoning issue, if it's a true commercial property, that's unfortunately not something we can do. We only do residential. Rob asks, are appraisals ordered through Angel Oaks AMC, or do we order the appraisal? You guys do order the appraisal on this. We do have a list of approved AMCs that you would need to use. It's all the biggies, so I'm sure you guys use them already. It's and we'll touch on the website here shortly where that list is. But yeah, you would actually order it yourself. I mean, that's not something that we get involved in. We don't make you pick a specific AMC or what have you. So, really, if it's on our list, you can use whoever you want. 1031 exchange. And again, guys, we do want to get to the website. I don't want to jam this up too, guys. But Gary, you want to cover 1031? And we already covered seller concession. So you do 1031, and then we'll jump into
we do allow for 1031 exchanges with the program as well. I mean, for those of you who don't know what the 1031 is, and it's I'm sure most do, it's where somebody sells a property and to avoid paying capital gains taxes, they have a limited amount of time where they can reinvest that money into another property. But yeah, we do allow for a 1031 exchange. I've done several myself here.
Perfect. And the reason why we're going to cover our foreign national program is because our foreign national does fall under our DSCR program. So we always tack in foreign national with our conversation. So Drew, do you want to run down foreign national real quick? Because we want to get into quick quote and marketing and all of that stuff as well.
Sure, absolutely. So as Ben said, it's a subset of the DSCR program. So a lot of the guidelines are the same. The only real things that you have to watch out for, of course, just realize they're for individuals who are not U.S. citizens. They don't live here. They don't work here in the United States. So a lot of scenarios recently, foreign investors with the housing market, they're looking to purchase in either anywhere really, near metro cities, vacation areas, college or universities. Maybe their child's coming over here. So it is an investment property. The maximum LTV is 70%. Of course, you see there is no credit score because they're not a U.S. citizen. Therefore, they don't have a social security number. Therefore, we're not going to get a credit score. We're not even going to ask for, a credit report. So going back to what I talked about earlier, as far as the 1003, you're going to fill that out as best you can. Where their current primary residence is in their home country. You're going to, of course, fill out their assets. One specific little requirement for the assets. And typically, we only require 30 days worth of source and season of funds. Now we're going to require 60, and that most recent 30 days prior to the closing, we're going to require it to be in a U.S. Bank. So we are going to have a little bit of a planning. That's kind of where I've found my foreign national deals is just making sure we have enough time to be able to get their funds from their home bank into the U.S. prior to the closing. As you can see there is specific visas. Definitely reach out to your local account executive to be able to go through your specific scenario and figure out, if the scenario works. We do require that the borrower set up an automatic payment. Same requirements before as far as the LLC. And another enhancement or an addition is we would require that the 12 months reserves The reserves can stay in their foreign bank or their home bank. But again, what I found is the kind of the tripping point is making sure we get those funds from the home bank into a U.S. bank for those 30 days prior to closing.
Gary, did you have anything you wanted to throw on Foreign National before we move on to the rest of it? I mean, Foreign National is pretty self-explanatory.
Yeah. I would just say, just to tie just briefly into what Drew was saying, is that we get questions from time to time about people who are actually residing in the U.S. So just make sure that, that they're not residing, working in the United States. They're not, this is a foreign national, not a permanent resident or non-permanent resident alien program. And Drew makes a good point too, like about, we need 60 days of seasoning on the money and 30 days in a U.S. bank. So we just have to make sure that that money is coming 30 days prior to settlement, and it's there in time for us to do a closing. And and the country can't be listed on the OFAC, State Department's OFAC list of sanctioned countries. Iran, North Korea, Venezuela, countries like that are on the OFAC list. They're not permitted. So just be aware of that. Other than that, and that was pretty comprehensive.
Yeah. They're great loans. Every foreign national loan that I've done has been around a college. Foreign nationals sending their kids to U.S. schools. Don't want their kids living on dorms or whatever, and that's and it's also an investment for them. So it actually checks off a few boxes. So I don't want to delay any more, guys. Getting you guys into our quick quote and to our marketing portal. So right off our landing page, guys, it is our non-QM quick quote. You can click it here or here. This is where you can go to run any scenario. You don't need credentials to this at all. This is easy. There's no issue here. But you can run any scenario, that you like. So if you were going to do a $900,000, 870 LTV, and we'll just say Maryland, because how about them Ravens? Purchase on a DSCR, and you can always select where you think your DSCR will be if you want to check pricing. If you think you're going to be a little light, what have you. You can always scroll down, prepay, all of that stuff, and you could run this quick scenario, and you can price in your LPC if you want. Again, this is for you to run, and this is super easy. You can do this on your phone. It's mobile friendly, so you can always take a look. Now, a big thing, again, we'll mention exceptions. FICO, say you're at a 728, or you're a couple points shy on something, or if there's something, please don't send that to us. We definitely want to take a look at it. That's something we might be able to do for you, but you can always view your rate stack. This would be based on borrower paid comp, so you always price in your lender paid. But to send us a pre-qual, so this is the other big part, is we do pre-qual every loan that we do. So we have the largest outside sales force in non-QM for a real reason. We believe in a local presence. So if you don't know who your account executive is, you can always come to our wonderful map, and you can select on a state. And there's me and Gary's handsome mug. So you can always come to your state, and you can see who your local account executive is. You can always send a message in onto our website also for anyone who wants to contact you. So I wanted to touch on that real quick, because I know we're getting short on time. So if you're not sure who your account executive is, please reach out to us. We'll get you introduced. That's actually a big part of our partnership. So we want you to, but with that, we do want you to send us scenarios. We love seeing scenarios. We love structuring loans and doing all of that with you. So you can just select any. This doesn't really mean, this isn't a lock. This isn't anything. This is just show you the stack, and then you can select, hit next, and then you would select your account executive. Or if you don't have one, just leave that there. We'll get you your local account executive. Just enter your information here. Upload your 1003 credit. Again, if it was a bank statement loan, it would open up for bank statements to be able to drag and drop. And then you would just hit submit. And that'll come over to us, and we'll take a look at it for bank statements. Obviously, we'll get that bank statement income ran for you. But for a DSCR loan, just that 1003 credit, all we need for us to take a look. and any issues with it, we'll absolutely, get those sorted with our credit risk team. Any issues we have, we'll definitely let you know along that line. I know I just ran through that really quick. I don't want to keep I know we're at an hour, getting close to an hour. I think we're going to go over a little bit, guys, but, in case people had a 2 o'clock Eastern, 2 o'clock, I wanted to get through this really quick. The importance of using our quick quote and quick qual tool is huge. But again, exceptions are rent. So don't, if you have housing history issues here, don't not send it. Don't send, if you have issues and no pricing comes up, just get in touch with a local account executive. We want to work with you on that. So, just if it doesn't fit this, because obviously it's programming, it's got to fit the box a little bit for here, but we'll take it from, we'll take it on from that side of it. Guys, did you have anything you wanted to add on quick quote or quick qual? I know I just kind of steamrolled through that.
I would just say, quick quote right here is where you can price all your loans. If pricing comes up, the scenario works the way you put it in. When you get to the step 3, when you select your account executive, there is a place for you to put comments. So if there's something that you want Drew or for me or your account executive to know that's not, readily apparent on the loan, please put comments on there that, we can read and we can share and so on and so forth. So we know exactly what's going on with the loan. And the other thing is, when you submit this to Drew or to me or anybody, you select our name. As soon as you click submit, the quick qual, we get an email saying it's ready for us to review. And when we write it up and send it back to you, we put comments on there. All the account executives here, we've been here for a while. You know how long I've been here and Drew's been here. And it's one of the nice things about here too, is you got a lot of seasoned account executives. There's a section where we put AE comments. Read those comments. We put them on there to make sure you don't make a mistake. Like on this particular loan, DSCR loans, I put in big red letters. Do not, when you submit this to underwriting, put tax returns in the submission, because that'll come back on you, right? So things like that. That's all I wanted to bring up, is just pay attention to the notes, and usually we'll turn these things around. If it's a DSCR loan that doesn't need an exception, we'll get it back to you same day. If it needs an exception, probably within 24 hours, we'll get it back to you.
Absolutely. Drew, anything you want to throw in there? Or?
I say almost exactly what Gary said verbatim. Just let, as I kind of mentioned before, the 1003 is the story. And so if that 1003 doesn't, tell parts of the story that you want us to know, type them in the comments. Typically, bank statement, we can get it back to you in 24 hours. So we want to turn them quick for you, because we know lots of times time is of the essence on your end.
Yep.
Absolutely. Guys, I don't want to end this until we give you a chance to take a look. Of course, it's logged me out. Who was going to do that? A chance to take a look at our marketing portal. We talked about what these loans are and, why you should be adding them in. But as I mentioned, a big part is that, for you to go out and be able to find these borrowers is a huge part of partnering. Obviously, you want to get your partners in line. You want to make sure that you have your investors lined up and the people that you trust and can execute, which obviously we hope is Angel Oak. But how you go find these borrowers and the education, the partnership with account executives for us to help you understand these programs and for you to be able to go explain these to your borrowers. The biggest challenge to non-QM, funny enough, is, in my opinion, at least my humble opinion, is when loan officers aren't comfortable with the program, if they're not sure, they're not going to go talk to a borrower about it, because the last thing anyone is going to want is to be seen as, something that they don't know what they're talking about, or there's a question mark, or they don't have an answer. So, we want to partner with you to actually educate you on these programs, the execution of them, what we need, what we don't need, things like that. But going and finding these borrowers should be a big part of your 2024. We use Encompass, of course, just like everybody. But our marketing portal, and we always want to, take folks. We always want to take people to our marketing portal. It's a great, we have a ton of delabeled stuff for you guys to be able to use. I always like to hit on the social media. all of our programs for Facebook and Instagram and LinkedIn, depending on whatever platform you currently use, our marketing portal does have something for you. Our flyers are extremely popular. We have them. We have all of them. Any program you could really ask for. We do have. There's actually a test environment, so we do actually have flyers in Spanish as well. But these are all. Oh, I guess I should pull up a DSCR one. Oh, here we go. And so you would actually create your own. Create your own flyer. None of this says Angel Oak on it. So you would come in, you can enter everything you got, and you can take and run with it. All of this is free. We can get you credentials to our portal, really easily. So, we want you guys to use these products and these resources for you to go find these borrowers. That's I think, again, with 2023 in the rearview mirror, and thank the Lord for it, but the plan for spring market and the summer and through fourth quarter of 2024, having that plan to really cast a wider net, expand those realtor and referral networks, adding these programs in, it should be a good conversation piece. We always like to talk about non-QM being Main Street lending. That's really what it is. When you walk down the Main Street, what do you see? You see a ton of self-employed borrowers. You see real estate investors. I don't know if people are members of BNIs and networking groups and things like that. Look around the table. Those are all non-QM borrowers who probably have been shut out, based on their either their tax return, their tax strategies, with a great CPA, or someone who's being, just outside of the box with investment property. So we do want to wrap this up, guys. I really do appreciate your time. Drew, Gary, true professionals. So I appreciate you guys, jumping on this with me. Any questions you have, please don't hesitate to reach out to your local account executive. You can reach out through our website. You can reach out to me directly. We'll get you in touch with your local account executive, and we'd love to partner with you here in 2024. Awesome. Well, thanks, guys. Until next time.
Thank you.